the key insight is, how does fiat get created? How does fiat money get created? And the answer is that fiat money, as I was saying earlier, once you've centralized the money, then it became the credit of the government. Basically, fiat means that the government's credit is money. So the government's credit is as good as gold in a fiat monetary system, which means that every time the government issues credit, the money supply increases. Which also means that anytime a financial institution that's backed by the government and guaranteed by the government, anytime one of these institutions issues credit, then the money supply increases. In other words, what I call it in the fiat standard is fiat mining. Borrowing, lending, is like mining. In Bitcoin, you have the proof of work as a way of producing Bitcoin, which ensures that it's always expensive to make Bitcoin. Nobody can make Bitcoin for free. With gold, you need to dig into the ground and take soil out and process it in order to make gold. But with fiat, the way that you mine fiat into existence is through credit. And many people think that government money is papers and you just print money and then that's how it comes into existence. And that's not true. The money comes into existence when credit is created, and then some of that already existing money is printed as physical bills. So the money is digital. Fiat is a digital currency, and it's created every time a loan is made. So this means that anytime you create a loan or you take out a loan, you're devaluing everybody else's money. So therefore, banks are inflationary, and banks benefit from inflation. And so if you go to a bank and you borrow $1 million in order to start a business, let's say, they're not taking $1 million from their own capital or from their customers and giving them to you. They make a new $1 million. So for them, that's why they really want you to borrow. That's why banks really, 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 really want you to borrow all over the world. And because every time you borrow from them, they make new money. So they are able to devalue everybody else's money by bringing new money into supply. And that's why it's much cheaper for you to buy your house with a loan than it is to buy it with cash. Because if you save money to get to buy the house, you're saving money that is declining in value. So the house keeps getting more expensive and your savings keep becoming less valuable. Whereas if you borrow, then you're letting the inflation work in your favor. The new money is generated. You've devalued everybody else's money to let your bank make these new $1 million that they're going to get paid back with interest. And because you're letting your bank do this very sweet deal, the bank is obviously going to cut you in on the deal because they want you to do that. So, they're not going to take it all to themselves. They're going to make it a lot sweeter for you to buy the house or start the business on credit than it is for you to do it with savings. So that's why if you have $1 million, you don't start a business with $1 million. You use it to borrow $10 million so that you can start a business that's worth $10 million.